Yeah, so I wanted to make sure everything is captured. And as I said, welcome to Financial Fed Friday. I am Darlene Jenkins, your co-host. My co-host over there is Dr. Rita Bailey Rowland, and we have Mrs. Mercedes Malone from Markios Accounting joining us today.
Good morning.
So we're going to jump right into it. As soon as I get back into the hang of things, you all. This is Financial Fed Friday. Welcome everyone who is joining us on Facebook, because this is a webinar that we do every other Friday at 10 a.m. and we are broadcasting simultaneously on Facebook. So welcome all of the Financial Fed Friday Facebook followers. And what we do on Financial Fed Friday is that we actually pull back the curtains so that you can get an in-depth understanding of not only the federal and state benefits, but also some of the best retirement investment options. So you want to go ahead, spread the word on Facebook, let people know they can register to be here live on the webinar with and I and all of the special co-hosts we're going to have this year. And they can register at www.ritabrolandevents.com. And of course, if you're on Facebook, tell them to head on over to and look for your AV Solutions, like us and follow us there. So before we dive into the information, Rita and I just want you to know that the information that we present here is going to be general in nature. Why? Because we don't know everyone out there, your specific situation. But guess what? If you reach out to Affordable Benefit Solutions and ask for your Financial Fed Friday team members, Rita or I, or any of our members here, we will be able to customize any of the information that we present here. So please accept this information as general in context and apply it to your situation where you feel it fits. So thank you so much for understanding that. Now, the whole purpose of Financial Fed Friday is just to help you understand not only your benefits, your money personality, your spending habits, which are determined by your money personality, and then to support and offer solutions that will enable you to reach your financial destination. So we are going to continue into efficient tax planning, right, Rita and Mercedes?
Absolutely. And it's going to be, I think it's so important for us to understand that most of us just get our tax form, give it to somebody, or go online and do our taxes. When you really understand the dynamics of taxes, how you can save, you really need to understand it. And in my opinion, you need to have some professional help unless you are the professional help. I am a CPA, a professional person, have a degree in accounting, but I do not do my taxes. It's not in my lane. Because it's not in my lane, doing it myself probably would make me lose $2,000 to $3,000. So is it worth me paying somebody to get it done? Yes, but we're going to share some really good information with you today. Now, Einstein, who's very smart, said the hardest thing in the world to understand is the income tax. So for Brainiac says that you know what it is for the rest of us. So it's really important for you to understand. We're just going to hit the surface. We're not going deep. We got Mercedes. You can contact her or whoever may be your own professional tax person. So as you learn the stuff today, make sure that you're just not rushing out there so you can get a tax return. You want somebody who can understand all the dynamics of your life, what you're paying, your investments, your savings, so that you can get the most. Because remember what Learned Hand said, it's not our patriotic duty to give Uncle Sam all our money, because for real, he ain't my uncle. Go ahead, dog.
So, yeah. So last week, and this is just a quick recap, Mercedes covered some of the major changes that are happening with the 2018 tax law, such as your personal income tax rates. They decreased for most taxpayers, the standard deduction that doubled, but personal exemptions, they were eliminated, and we're going to get more into how that affects your tax picture. Also, the alternative minimum tax that still exists, the child tax credit that doubled, earned income tax credit, your state and local taxes that stayed. However, there were some caps, correct, Mercedes?
Yes, on the state tax, the cap is $10,000.
Yes, so for a lot of people, that may have a great impact on your tax return. And so that's why we wanted to continue to dig into this whole tax and understanding efficient tax planning, because this is going to be important. Choosing the right income tax filing status, that is crucial. And there are 5 tax filing statuses. You can be single, which means you were unmarried at the end of the year and you do not have any dependents. Now, you can also be married filing jointly. You were married and you live with your spouse, or you can be married filing separately. You were married at the end of the year, but you chose to file as a single payer, or you may have been married but separated from your spouse and you were not living together. Now you can, the other status is head of household, which means you were unmarried at the end of the year, but you had a dependent or dependents. And then there's the qualifying widow or widower with a dependent. And this is someone who was widowed for the previous 2 years, your spouse had passed away, and you also have a dependent. Now, when they did the tax change and, all of the hype was on, oh, you're going to see more money on your check. And a lot of people, we did see extra $20, $25 on our check. But what wasn't pushed as much and talked about were the withholdings. So right now, some of you may have filed your income tax, or you're about to file your income taxes, and everyone in the news has been hearing about, hey, I owe money this year, or I got a big refund last year, and this year it's a pittance. So, Mercedes, can you speak on that just a little bit about the understanding the statuses and the withholdings?
Yes. So, what I usually tell people, if they are, depending on what the income is, if they are married filing jointly and they have 2 children, so they can do married, each of them should do married 1 and 1. What I see a lot is that both spouses will have married and 2 or 3 or 4 for the whole family, so they're not taking out enough withholdings, and then thereby they do owe taxes at the end of the year. And as you mentioned, some people did notice that they were receiving more money in their checks. And I've seen that as well. And what happens when they go to file their taxes is they can see that same difference that if they compare from this year to last year, and if they owe, is usually by that amount. So you did see more money in your paycheck, but you owe taxes. So a lot of people not happy this year about that.
Absolutely, they're not. And we're seeing it more and more in the news. So these are these are the 2018 filing status and withholding, because we now went to, they eliminated some of the tax brackets. And Mercedes, don't let me go off the rails here, because you are the tax expert. That's why we have her on here. Rita and I, we know a lot of things, but we always bring on the experts. And so you can see here where your income bracket falls, and it's very important to understand the taxes you will owe depending on where your income falls. And so if you don't have enough withholdings, then you're going to end up owing instead of getting a refund. So you have to be really careful, as Mercedes said. So if you're if you're earning $82,000 to $157,000, your taxes that you owe are already $14,000, plus you owe not 24,000. Oh my God, can you imagine? 24% of the amount that is over the 82,000. So that's 14,000 plus 24% of the amount that's over the $82,000. And the only way that you will make sure, and that was for a single person, to make sure that you don't end up owing is by making sure you have updated your W-4. And this is a picture of it that shows you exactly, where you would mark your allowances. And of course, and Mercedes, if you could please speak on this, the more allowances that you take out, the less money the less taxes that they will withhold, and you will have more money on your check. But you don't want to wake up in 2020 because you put down here 8 allowances. The tax law has really changed. And before people, they would often employ, well, I do a whole bunch of allowances and then I switch over to 1 or 2 at the end of the year and it balances out. Well, that may not be a good strategy. And that's why talking with a professional, if you have a tax preparer, you want to speak with them. If not, please reach out and contact Mrs. Mercedes Malone of Markios Accounting so that you can get this right. Because what you don't want to do is owe Uncle Sam taxes, right, Rita?
And not only just you owe taxes, you end up at the end of the year. So many clients are now in the state because they were getting back, $400 or $500 more, and then for 6 months they're getting less, and so their budget is all out of balance. So what happens with that? It just allows people to live beyond their means, in my opinion. And then when they got to pull back the rein, they now back in trouble again because they're out of balance. So having somebody to tell you what can you claim the same all year, so you don't have to do this roller coaster ride in terms of your taxes. So it's important to know what that is. It's not important to give Uncle Sam all your money all year. You can keep that in your own pocket, but you don't want to have to end up at this place where you owe, because believe me, the interest never stops accruing.
If I could interject too, you're right, interest and penalties.
Yes.
If you make over 100,000 and you're married, I usually tell people to do the married right here, but withhold at a higher single rate.
Yeah, take notes, everybody. Don't just listen.
Married, but withhold at a higher single rate.
So click here, Mercedes, and
no, the next one over.
Oh, the next one over, married, but withhold at a higher single rate. Okay.
Correct. And they will be taxed as single, and the appropriate amount of taxes will be withheld. Now, if you are single and you have one, we say this all the time, if you're single and you're the only person on the tax return and you do single and one, that's your break-even point. So you shouldn't get, if you get anything back, it might be a couple of $100, but that's it. That's a great way to be as far as your taxes, because I always say, I don't need the IRS, and you shouldn't want the IRS to hold your money for a whole year. They're not paying you any interest, and you actually are losing the value of the money is lost value because of the cost of living. So, refunds to me are overrated. I just want to break even.
Absolutely, because when the IRS holds your money, then that is less money that you have to save for retirement and get the other plans, financial plans in place to help secure up your base of your financial pyramid. Excuse me. So that's going to be extremely, extremely important. Thank you so much for that, Mercedes. Now, tax planning for income. Now, when you're tax planning for income, Rita, you want to go ahead and go over this?
Yes, just, Dr. Ollie was like, what happened to her? So one of the things, Mercedes, I'm going to need you a lot in this. I think the important thing, which I have done the last few years, is really trying to plan what's the best way and what should I do so I do not pay as much taxes. For us being self-employed, it's the hardest thing to do to live your life and not pay as much taxes at the exact same time. So postpone your income to minimize your current tax liability. So I have some clients right now that retired at the end of the year, or retired like in September or October, and they wanted to take out money from their thrift saving plans, or they have some large income. I say you may want to wait till the next year so that can reduce, because normally when you retire, that income is at a lower rate. So one of my clients retired undeferred. She was going to get 34% of her income. So we moved the withdrawal that she wanted to take out of her thrift to 2019 so that she would not take that big income and that tax. So that would have taken her to another tax bracket. So, or you may have some dental work that you want to get done, or some expenses that you can push off so that you can bring it to the current year so it can reduce your taxes. So the whole purpose is trying to reduce your taxes. Now, you can also shift some income to some family members to lower your overall tax family burden. Now, Mercedes may talk about this a little bit more, but you may have a husband or, you know, a grown child that you have some income that you can put in their name to reduce the taxes. And there's one thing that I did learn, and Mercedes, if you can please add, let's say you have a child, Darlene had Jordan, all those years she was paying her an allowance. Let's say she's paying her allowance, but Darlene's in business. Can't she hire Jordan to file her files over the weekend, organize her stuff, instead of paying her allowance, pay her a salary? There's a certain amount that Jordan doesn't have to pay, and Darlene can write it off on her taxes, which is why it's always important to have someone who can help look at your entire picture so you can strategize that what best suits you and your taxable income. Mercedes, can you add to that part? Because I think that's something that we don't do. We don't sit down and plan our finances. We plan a vacation, we plan a wedding, we plan a party, we plan how we gonna pay this Upco bill, how we gonna pay cable, but we don't plan how we're gonna really strategize for our wealth for us and our families.
So the important thing there is, when I tell everybody, listen, you got kids, put them to work. Okay, so the important thing is, according to the IRS, they have to have a real job and real responsibilities. So as long as they meet that criteria, it can be deducted on your taxes. So
yeah,
so that's what we advise them to do.
And I think it's something too, Mercedes, you want to talk, it's something about a kitty tax rules, something about if they don't provide more than half of their support.
Correct. If they don't provide more than half of their own support, then they don't have to file a tax return. And most of the time, I call kids freeloaders. So if they are freeloaders, then they are not in a position of taking care of themselves. So we do what we legally can so that they don't have to file taxes.
Okay.
Darlene, this is very important. I just wanted to say something for those of us that have children that will be working summer jobs. Like this year, my daughter Jordan, she will be working a summer job and she will be getting paid at a higher rate than the normal minimum wage. And so this is very good to know that, because she does not provide 50% of her care, that she doesn't have to file that money, because that was a big concern when she first started working during her summer job. Will I have to pay, file an income tax? So thank you. That was,
is she still in school?
Yes, she is still in school.
Okay, so she's still in school and she's working. Then I usually tell students, depending on how much they work, I usually tell them to do exempt, because then that will alleviate them having to file a tax return, because at her age, she's only going to file a tax return to get her federal and state withholdings back. So she can file exempt as long as she is not making more than $12,000 this year.
I wish. She won't be. So you get that, parents, if your child is working, make sure on that W-4 that we showed you that they file exempt.
Okay. Dolly, I'm not finished. Where you go?
Oh,
y'all.
Right here.
Deduction planning requires proper timing and control over your income. And the first place I would say you need to start with, are you going to itemize or do you have standard deduction? Now, what we learned last week from Mercedes is that they took away the exemptions. So we have a choice to either do standard deduction or what is it called, Mercedes? Itemized deduction. The standard increased for a single person to $12,000, for a married 24. So you then got to start planning. And for you people like me who pay your tithes and your offering, if you want a deduction, some of you just put money in the basket. You don't even get a tax form that could actually help increase your deductions. Is a tax write-off. I mean, we're not giving it to it so we can have a tax break, but because it's the law, it's okay to get it. So you got to start to plan and properly time everything. At the end of the year, what you should be doing is, as we see here, year-end planning, after September, October, you need to start looking, okay, how much have I made? How much tax am I going to make? Have I maximized my retirement plan. I need some work done health-wise that I can deduct from my itemized. Do I do it this year? Do I do it next year? Are you sitting down with your accountant and say, okay, this is what I get. What does it look like? And I'm going to owe money. You're going to owe. Well, what can I do over the next 3 months so that doesn't happen? And it requires all of us to do something about our own money. And not just sit around, wait for them to send us a form, and then we in this pure shock and we mad at the world because we owe some money or we didn't plan properly. It requires us to do something and to do some planning and to look at what tax bracket am I in. Did I increase because I just got a raise? I did this withdrawal. I'm going to get a cost of living here. How does all of that play into tax? There's no need to make all this money and then it's gone in taxes.
Amen.
So create a plan, sit down with some professionals. If you're not the professional, sit down with somebody. I tell you guys, we spend money on vacations, on stuff that's not important, shoes, clothes, eating out. But you say give somebody $400 or $500 to tax plan. Oh, I don't want to pay that. So you do pay it. You're giving it away to taxes because if you can pay $500-$600 to save $2-3 grand, to me, there's a net profit. And for me, I'm about the net profit.
And this is going to become even more important, Rita, for those of you that are moving into retirement, this whole marginal income tax bracket, because it's going to be important when you are in retirement and even now, to understand that the next dollar, when the next dollar I spend will push me to a different tax bracket. So that's why if you sit down with your Financial Fed Friday team, Rita and I, or any of the Affordable Benefit Solutions team members, we can help walk you through that. And we have our tax professional here, Mrs. Mercedes Malone, who can also guide you. You want to have a guy that is competent and knowledgeable. And here you have it.
Absolutely. All right, now you can go.
Okay, I wanted to make
The other thing is that understanding how our investments are taxed, and I think that's so important. We got stock here, we got this, we got that. We don't understand the whole impact of it. So one of the things you want to know, is it ordinary income or is it a capital gain? Most times it's ordinary income. It's like interest on your bank account or a CD, but capital gains could be from your real estate, your stock, your dividends. So it's important for you to know, based on your investment, how is it taxed? And then you got to categorize your ordinary income. Is it taxable income? Is it tax exempt income? Is it tax deferred? So taxable income is just your income. It's the interest on your bank account. Tax exempt, the things like municipal bonds and I think it's security. Those are the things that if you invest in those, they're exempt. And then there's tax deferred. It's your thrift savings, your 401ks, your IRAs, your specialty design, your life insurance is tax-free, and then you have annuities. So understanding what category your investments are in and how are they taxed, and then understanding the basis, like what is the basis? The basis means what did you pay for it? And so let's say you buy a house and you bought the house at 100 grand, and then 5 years later you do 20 grand worth of investment. So your adjusted basis is now 120,000. And then you sell the house for 130. Well, you have a $10,000 gain because 130 minus 120. Let's say you sold it for 109. Your basis was 100. Your adjusted was 120. You have you have an $11,000 loss. So understanding your numbers, what does all of this mean? When you buy a house, you go to refinance. You don't understand the number. Ask your person who's doing this loan for you. They're getting paid to make sure you get this loan. You need to understand what are those numbers and how will they affect my income taxes. Say, did you want to add anything to that? And we got a question. Now it says the signal is low. Is that still low?
I didn't get anything back, but Mercedes, someone asked if you could just really briefly, and this is why to explain the marginal tax rate. We're going to go over it really quick because we have a lot of information and we want to make sure we get everything to you all, but please reach out to us. So this is why you want to sit down with Markios Accounting, with Affordable Benefit Solutions, your Fed Friday team, so that we can go over that. But Mercedes, could you quickly go over what is the marginal tax rate?
Okay, so basically it is the amount over what your uh is what your regular income is based on a bracket. So if a bracket, if that bracket that table you had a few slides back, and the salary we looked at was 82,500, and so 82,500 to 137.
157.
157. Okay, so the marginal rate would be anything over that 157. A lot of times, too, depending on what your adjusted gross income, it may very well be the same as your marginal rate. Now, along with that, I'm just going to throw in this freebie about the alternative minimum tax. So if you make a certain amount of money, it don't matter how many write-offs you have on your Schedule A, you are itemizing deductions, the IRS say, hey, based on this amount of money, let's say it's 250,000, based on that amount, you should pay a minimum, at least this amount of taxes. So you can have $200,000 in write-offs on your Schedule A, unrealistic, but it's not going to make you get any more of your money back you paid or any less. It's just they have that amount that they say you should pay at minimum.
Yes, and so as you can see, that's why I have a professional to do my taxes, because TurboTax, as wonderful as they are, all Intuit, all of them, they are great. But the fact of the matter is the tax climate has changed. And as Rita stated earlier, we have to get out of our own way and put that money on the table to have a professional to do our tax returns. Of course, unless you are a student and, you know, everything is exempt.
She like that. She's thinking about her daughter that was. The next thing you got to do is using your capital losses to reduce your tax liability. So you can use a capital gain loss to offset a gain. So you can take one asset, your real estate, and offset maybe a stock or bond. And you can also, Mercedes can verify, you can also carry over $3,000 in losses until the next year. So even though we don't like to lose anything, it can help you. If you're going to lose, I believe I need to get something out of losing my money. Right? So you can carry it over to the next year to balance out your income taxes. So it's just understanding all of these things. And we're not telling you to go take a tax class. Right. Just as you begin to do we probably should, right? I'm telling y'all, school 4 years, degree, passed my CPA. I took an exam, y'all, that was 20 hours. It was 3 days. It was Wednesday, Thursday, and Friday, 8 hours and 4 hours on Friday. So I understand, even with that exam and practicing as a certified public accountant for 3 years, I realized that even taxes is not what I know how to do good. And so it's always just important, as my last point is to seek professional help and things to get that are more complicated. If you don't understand it, it's okay. Like Darlene said, for years I did taxes for me, my family. I had a line of people for TurboTax that asked a question. I understand something, but if it was too complicated, I told them I couldn't do their taxes. Because they may ask you your question, but if you don't understand what it means, you still messing yourself up, because understanding is an excuse to not lose your money. So it's important to do that. So we just wanted to go over some things with you about taxation, investment, your income, understanding your bracket. But y'all know we like to have some fun over here. So I just love these pictures. The first one is income tax season. Somebody trying to determine who's going to claim that child. Who's getting that $2,000 tax break, because it is here and it has begun. But this is the one I love from Dave Barbari. It's tax time again for all those listed on the phone. Americans, time to gather up the receipts, get out those tax forms, sharpen up that pencil, and stab yourself in the aorta. And I know that's not good, but that's how people feel when it comes to taxes. So as bad as it is, I just wanted y'all to laugh today, because you know people going to determine who's going to claim that child, and y'all been claiming y'all nieces, nephews, JJ on the corner. all of that stuff is trying to get a tax break. So that lets us all know what we're willing to do to not have to pay taxes. What you want to do is be willing to do it correctly, because the IRS is coming down on all of these bogus tax returns, people lying, faking. You don't want to do it that way. What you want to do is sit down with a professional who can help look at every area of your life that has a taxable piece to it and figure out what is the best way for you to do this over the next 12 months so that you can pay the least amount of taxes. So I had some friends who was coming into a lump sum of money. They had an opportunity to take the money in December and owe taxes in 4 months, or wait till January so they wouldn't owe taxes for another 16 months. See, that's planning. So they've decided to hold out on their lump sum so that they cannot have to pay taxes on it. It gives them at least 16 months to make some money off of that money before they even have to pay taxes on it. So planning is everything, and understanding how it all impacts your bottom line, your pocket, your retirement, what you're gonna leave your heirs. It's important to know taxes can eat up every phase of your life. You know, it's a picture we have, Darlene. It says, you earn it, you tax. You spend it, you tax. You share it, you tax. You die, you tax. So it doesn't matter what it is. Every aspect of your living is going to be taxed. So we want to give the least amount of money to taxes.
So what's going to be up next for March? Well, everyone knows it's basketball season, March Madness, but guess what? At the Financial Fed Friday team, March is Money Madness. And we're going to continue where we go over, digging more into different asset classes for your finances, as well as college planning for your finances and how all of that plays. And of course, we're still all year, because this is so important. We will be continuing to talk on the taxes, how the taxes play a role in that.
Yes, so that's important for you to know. So what we decided to do, because we understand these new tax laws are changed, you may see Mercedes up here a lot more than you've ever seen anybody in our past Fed Friday, because almost everything. So when we talk about insurance planning, how can you use insurance to create wealth, save for retirement, pay for your kids for college? What is the tax implication on that? So every aspect of probably your finances, there's something to do with taxes. So we're going to try to share tidbits on all of that during a year so you can understand this whole tax thing. It's really time, y'all. It's time for us to get it together and to start to put our finances first. After God, after your family. But you know what I'm saying? You got to put it somewhere up here, because if you don't, you'll find yourself down here.
Absolutely. And you want to go ahead and file your taxes as quickly as you can. And the reason you want to do that is because you want to see where you are in the process. Am I going to owe money? Did I get too much back? So that you can go ahead and make that adjustment right now. So you want to go ahead and do that. So as we always say, planning, which is what we here at Affordable Benefit Solutions are trying to bring to you. Planning is bringing the future into the present today, right now, so that you can do something about it now. So we're trying to take you out there to the end, to next April 2020, bring you back here so you won't owe maybe again next year. Do something about it now.
And if you do owe, if you do get back, let's say out of all the changes and everything is done right, you got back $7,000. What you gonna do with it? Are you just gonna blow it, go buy a vacation, pay off something that how about you talk to somebody who's a professional? What can we do? That's $7,000. That's almost what, $600 a month, a little less than $600 a month. What if you took half of that and put $300,000 in investment and a savings somewhere that can earn you money? Because what you get back from the IRS is just what you gave them. You don't get anything from it, nothing extra. What if you take part of that and put it somewhere? Talk to us. Where can I put this $300 a month so that I can create my wealth and not just get it back as a lump sum, put it in my savings, earn it less than what, 0.2%, or I'm going to go pay off some bills I made or buy a new refrigerator. What's right for you? It really does depends.
Yes, it absolutely is. I'm not good at trying to multitask. So let's read it. Say, what's going to be right for you? It does depend. So please contact us today so that we can map out a strategy that is for you to help you reach your financial destination. And so how can we help you do that? Life planning, questions to help you imagine your life in retirement, budgeting. What are your budget? What needs do you have now and in the future? Getting those expenses all written down. Account management, IRA rollovers, Roth conversions, establishing suitable withdrawal plans for you, as well as portfolio management. We can help you with all of that here at Affordable Benefit Solutions. Rita, and we are Affordable Benefit Solutions. We are a full service financial solutions firm. So no matter what your financial area need is, we here can help you, whether it's with retirement planning. I'm getting ready to retire, learning tax-free retirement concepts. If you're young here on the line, and when I say young, I mean 50 and under, and those of us that are 50 and older, we're just more experienced, but some concepts suit better age groups than others. So we can show you about being your own banker, tax-free retirement, rolling over, how to best maximize the funds that you already have, especially as you go into retirement. Estate planning, how to minimize the taxes that your loved ones are going to have when you pass over and cross the great river to the by and by. So we want to do that through efficient tax estate planning with the use of living trust. I can talk for days on that. That's what happened with me and my mom. The best thing, I won't even get into that, but also getting further into that, it's a great opportunity for you to tax efficiently pass on your assets through a living trust. Also, insurance services, your life insurance, protecting the greatest asset you have, because when you leave, and that is you, the greatest asset you have is you, not your home, not your car, it's you and your ability to earn money. So when
what's so important? Go ahead, Rita. It's so important about it. When I look at that insurance thing, it pops out of me for a few reasons. One, my mother, she died in the 77. So of course she worked for the government. But looking at this right here, had she had disability income on the outside, our lives would have been different, because she would have had some other stream of income paying her while she was out of work, basically for 3 years. She would work a month, off 4 months, work a day, off, 15 days. So that would have been important. Of course, in her care, when she got to a point where they said she was terminal, a long-term care would have provided another stream of income while she was out of work into that time period. And of course, it wasn't out then, but just think about yourself. And then life, she left us some, but you think about it, 3 kids, 11, 13, and 15, to have to, let's say, potentially go to college, that was at least another 11 years of income that was needed to provide for those kids the way she wanted to. Having those insurance plans, most of us just say, well, it's not important. I don't care what happens at death. Do you really mean that? But what if you don't care about what happens at death? But what do you care about what happens while you're still living? Having the proper plans in place could change how you heal, how you are you free? Are you stressed out? Because there's one thing to be sick. There's another thing to be sick and worrying about how you're going to take care of your family. That's another whole illness in itself.
Absolutely, Rita. And I also get this a lot, Rita, as well, when it comes to life insurance. I don't want to make anybody rich. You are not going to make them rich, leaving them a $50,000 policy. They are not going to be rich.
How about you? Okay, you don't want to make them rich, but don't make them poor either. Come somewhere in between. You don't want to make them rich, but come somewhere in between. Don't make them poor. Don't make them not have anything as a result of you making a bad decision because you don't want to leave them nothing. That's selfish. Those are your kids. Those are your loved ones. Those are ones who you provide for. How you leave them hanging. So
that's true.
I'm sorry, y'all. This is emotional for me. It's like you in Facebook. Tell me. GoFundMe is not an insurance policy.
Amen.
So tell all your friends, you got Javon on the line, you got Robert, you got me, you got your friend. Tell them to get an insurance policy. Even if it's not to make them rich, as Darlene just talked about, how about just not make them withdraw from their retirement plans, cash out their savings, not pay their mortgage so that they can bury you? How about that?
Absolutely. Ladies,
Y'all
you
passionate.
are on it. And of course, we also offer credit and debt elimination, where we can show you, give you enhanced budgeting and credit systems to help you get out of debt and kickstart a new financial you. Because guess what? If you are straddled with debt and have bad credit, then it's going to cost you more to get the things that you need in life. And it's going to make it a little tougher to save for retirement. And that's not what we want you, the situation we want you to be in. So please give Affordable Benefit Solutions a call today, 301-577-6340. And that is all of the time that we have today. Thank you so much for joining us. As always, we welcome any questions that you have. Melody, you asked if the slides were going to be available. The slides will not be available, but you are always welcome to go to our website, which is listed there, www.yourabsolutionsinc.com, and you click on the Financial Fed Friday tab, and you can watch all of our videos there. Also, we have a YouTube channel, Your AB Solutions, that you can watch all of our videos there. As a matter of fact, if you could, please go to YouTube right now. Facebook, go to YouTube right now. Google Affordable Benefit Solutions. You're going to see our logo, and please subscribe to our channel. That way you'll know if you miss a Financial Fed Friday, you'll get a notification. Hey, they just uploaded a video. Rita and I will be posting different little tidbits in addition to the Financial Fed Friday. So please, hi, Jeannie. Jeannie Torado is watching us from London. Hello, how are you? Thank you so much. That's one of our faithful Financial Fed Friday watchers and listeners. So, hey, Jeannie.
From
so
London.
Please head over to YouTube and look for Affordable Benefit Solutions. You're going to see our logo, or you'll see Rita and I's smiley face. Subscribe to our channel. Rita?
No, this is just, you guys, I just appreciate the fact that you guys get on, you listen, and don't just listen, take notes and take action. I know y'all probably say Rita just crazy. She just be going at us, but I can go at myself. I spent years of going broke, going up and down, and I know better. At some point, we have to stop the bleeding and do something about ourselves and our finances, and using professionals to help us. When you get sick, you go to the doctor, right? When you get in trouble, you go to the lawyers, right? When we go anything, we go to a professional. But when it comes to our finances, we act like we're the professional, and then we want to know why things are like they are because you didn't use a professional. You may be a professional, but you're not a professional in this aspect of your life, which is why there's a person for everything. So we thank you again, Mercedes. Thank you so much. Just look forward to us pulling on you for the rest of the year, because it's important for us to help you know better. Because Garfield said, once we know better, we can do better.
We can do better. Thank you so much, Renee. Everyone on Facebook that has joined us, our team member, Mrs. Javon
Jackson.
Who's been helping us out on Facebook. Jeannie, enjoy your time in London. Are you there golfing? And if you are, get a hole in one for me. Enjoy your life. Everyone, have a fantastic Friday. We will see you back here in 2 weeks on the broadcast. When you come, don't bring one, bring two. Tell them to look for us on Facebook at Your AB Solutions. And of course, they can always register for the live webinar at www.ritabrolandevents.com. We'll see you back on the broadcast. Take care, everyone.
Have a great weekend.
And you're more than welcome, Melody. Head on over, take note of our
YouTube channel or our website.
Thank you, website. You can also email us directly at FFF, that stands for Financial Fed Friday, but that's FFF at yourabsolutionsinc.com. Shoot us an email. Tell us what you think. Hit us up on Facebook and just, give your feedback. That's what we're here for. And if there's a topic that you want to hear that we haven't covered yet, please send it to us. We'll see you in 2 weeks. Take care, everyone. Have a great weekend and get those taxes filed. Reach out to a tax professional.
Mercedes, bye.
Bye, everyone.